Hello, this is Steve Malone with Compass FX. Hope you're doing well today and you're getting some good trades. Today we saw a beautiful move in the euro dollar to the upside against what many had expected to be a continual slide down in the euro dollar due to the Spanish debt issues starting last week and were expected to continue into today. However, due to some fears of a credit squeeze in the European markets, there was a repatriation back into the euro today, and due to that, we had a short squeeze in the market. So what I want to do today is talk a little bit about the setup of a short squeeze, what are some of the reasons behind it, what is it specifically, and more importantly, how do we trade from a short squeeze? So let's take a look at the euro dollar on a 4-hour chart. Now, one of the things we look for typically in the marketplace is certain levels to be broken, and you can see here in the euro dollar that we were range bound up here, and the market came down and broke a 200 simple moving average. This is all this is a 200 simple moving average set to close. And so you can see that the market broke that, moved on down, and then when the market moved up to test the 200. Now this is something that professional traders look for, and it's something that's actually programmed into a lot of algorithms. If you do not break the 200 moving average, then you look for the market to continue in that direction off the bounce of the 200. So last week there was a movement down in the euro dollar, and that was fueled by the Spanish debt crisis, and there were expectations today to see the euro continue to fall down into the 129s. Well, as soon as it got into the 129s today, down in this area, then we started seeing a move up in the euro dollar and a continual move back up in the euro dollar, very strong today. This is what's known as a short squeeze. And I've often had people write me and ask, what specifically is a short squeeze? It's a situation in which the price of an instrument, be it a stock or a currency pair, is where investors who sold short are returning back to the marketplace to cover their shorts and cut their losses. So all the shorts that were being built up last week and continued into today, they were covering their shorts, cutting their losses. And that caused a strong move back up today. Now, with that being said, there was no real instigating fact. It was just the fact that we saw the euro coming up and continue to come up, and algorithms triggered buy stops, and those buy stops led to more of a movement to the upside. Traders say that there were leveraged names and institutions involved in the move up, but no specific thing instigated the move. And sometimes that's a fact with a short squeeze. Sometimes the market moves up just enough in a short sell situation to trigger buy stops, algorithmic buy stops held by institutions. And when a buy stop is triggered and the market pushes up, oftentimes it triggers another buy stop, which causes the market to move up again, thus triggering another buy stop. And you get this move up in the marketplace. Now, so far, the euro's come all the way back up to almost the 130, 150 mark. And so some are looking for a movement back down in this, since we're still below that 200 simple moving average. So from this standpoint, I'm going to drop down to the 1-hour chart. I want to talk about how we could potentially trade from this short squeeze. Now again, if you were short here and then you had to rush in to cover, now the situation is, well, how do we play this? What I look to do is I look at the 1, 2, 3 down strategy. And what I mean by that is we have a high point, that's point number 1, a low point, that's point number 2, and then we have our third point, which is right around the 618. So when we get that 618 reversal, and it's still up in that area at the time of this video. So what we'll look to see is, does it stay up around the 618 and falter? Does it move up to the 786, back up to 3165 area and falter there? That'd be a 786 failure. If it can't get up to that area and fails to stay above the 618, then we'll look for a 1, 2, 3 down pattern. This is something I often look for with a short squeeze scenario, because big picture is we're still below that larger 200 SMA on the 4-hour chart, and their expectations are for the market to move back down. So if the market comes down and stays below the 618, then I've got 3 targets in mind to trade short. I look for the 50%, the 38.2, and the 23.6. Just simply play those fib levels as potential targets for the market to move to. Now, eventually, you'd like to see the market move all the way down to the low point, which is down to right around that 29.94 level. But with a short squeeze scenario, what I look for is simply this. You look for a rebound back up to the 38.2, and if the market breaks the 38.2 level and continues pushing higher, then it's possible time to cover your shorts. And then if it breaks 50%, then you look for it to go to the 618 level. And that's kind of tough having it to come out of your shorts. Now, sometimes you can average into a position if you still think the market long term is just showing a short move. Now, something for us to consider is the ECB may be stepping back in and buying bonds to help the Spanish banks. Every time the ECB has stepped into the marketplace to buy bonds, that has encouraged a move up in the euro dollar. So don't be surprised we get a continual move up. But right now, what I'd be looking for is a possible 1, 2, 3 down pattern if this turns over and rolls down. And then you'll look in your intraday charts. So if we'll go down to the 15-minute chart, for instance. We'll look for that 618 to give way, and we'll look for the market to set up. You can see the strong move up, 23.6, 38.2, right through the 50 to 618. Now this is showing a bullish pennant, but if it gives way, look for the market to come back down to 131. If 131 doesn't hold, then look for a move down to 3080 area, and then possibly back down to 3050, 3045 area. The market, though, based upon the TDI in the intraday, is pretty high. The market baseline up around the 68. Usually the market baseline gives when it's up this high, and we see a move back down to the 50. Now, just make note, if the sentiment in the marketplace turns and starts falling back over towards the 50 level here, and price stays up here, then that is a sign of continuation, and the market could try to push back up higher, back towards that 200 SMA that we have on the 4-hour chart. But I would look for the possibility that if this rolls over, we break that price action channel right in this area. I'd say right around the 31.15. Look for the market to start making its movement back down. So when it comes to a short squeeze, it's kind of tough to analyze exactly where it's going to turn, but oftentimes look for the market. When the market breaks that 23.6, starts going to the 38.2 and continue to rise, there's a likelihood that you're in a short squeeze scenario. After the short squeeze and you get a move back up to 618 or possibly that 786, start looking for a 1, 2, 3 down scenario due to the fact that the market still insists that the 200 moving average, if we're still below that, and like I said, there could be a chance it could possibly push up there with a bullish pennant showing on our intraday, might be a retest of that. But again, if it can't seem to do that, then look for a move back down into these areas. If the market does not come back down and does not break below the 23.6 or the previous lows, then look for a continuation back to the upside. Well, folks, it's Demon with Compass of X. Hope some of this information will help you the next time you see a short squeeze. Either look for the market to play back down using a 1, 2, 3 down strategy, or if the market doesn't break the previous lows or the 23.6, start coming out of positions for a continuation back to the upside. Y'all have a great day. Get some good trades, and we'll talk to you next time. Bye-bye.